Welcome back, deep divers. Today we're diving into, well, a really significant document
Yeah.
in the world of finance and, frankly, just wisdom. We're talking about Warren Buffett's 2023 annual letter to Berkshire Hathaway shareholders. It just came out in February 2024. But this one, it feels different. It opens with something quite moving, actually, a really heartfelt tribute that kind of sets the tone.
It really does. And our mission today is basically to unpack the core wisdom in this letter, try and pull out the key takeaways, because it's packed with insights, on long-term value, decision-making, legacy.
Yeah, he's still sharing these lessons even now. Okay, let's unpack this. So, as you mentioned, it kicks off with this really powerful dedication. Buffett opens by talking about Charlie Munger, his longtime partner, his friend, passed away last November 2023, just incredibly, 33 days before he would have turned 100. And their partnership went way back, right, to 1959. What was Munger's real impact there?
Oh, it's huge. You really can't overstate Munger's influence on Buffett and, well, on Berkshire Hathaway itself. Munger's the one who famously got Buffett to completely shift gears in his investing. Before Munger, Buffett was more about buying okay companies, but really cheap, finding those cigar butts. Munger pushed him towards focusing on great companies at fair prices. It wasn't just a small change. It was fundamental, thinking about the quality of the business, the long-term strength, the moats.
Right, the durable competitive advantages.
Yeah.
And Buffett really makes that clear in the letter. He calls himself the builder of Berkshire. But Charlie, he says Charlie was the architect, the one who drew the blueprint. That's quite a description. And beyond the investing side, what about Charlie's personal qualities? Buffett mentions he never wanted credit, never gloated.
Exactly. Those things you mentioned, the humility, the loyalty, no ego, they were absolutely key. Munger's wisdom isn't just history. It's like baked into Berkshire's culture. His ideas on patience, discipline, finding real value, they still drive decisions. But also just his honesty, his focus on being rational, that kept Berkshire grounded,
Yeah.
away from emotional decisions. His legacy is just incredibly powerful.
The partnership, it really shaped everything. And speaking of communication, Buffett explains who he pictures when he writes these letters. He imagines talking to his sister, Birdie. Describes her as smart, sensible, long-term thinker. She's held Berkshire stock for ages, apparently. Doesn't trade frantically, doesn't chase hot tips. It's a simple idea, but powerful, isn't it? What's the deeper message there for us listening?
It's very insightful, yeah. By writing for Birdie, he's basically asking everyone involved with Berkshire and really anyone trying to make thoughtful decisions to kind of adopt her mindset. Be calm, be patient, focus on the big picture. The message is about cultivating that perspective. We live in this world of instant news, constant information. Buffett saying, slow down, be measured, approach things, investments, projects, whatever, with that long view. Ignore the daily churn.
That Birdie concept definitely helps set the right frame of mind. Okay, let's switch gears a bit. Let's talk numbers, because this is where headlines can sometimes, well, confuse things. You might see news saying Berkshire made, what, $96 billion in 2023? Sounds amazing. But Buffett says, hold on.
He does, yeah. That $96 billion figure, while technically correct on paper, includes, as he puts it, wild swings in the stock market. Those are unrealized gains or losses from their massive stock portfolio. They go up, they go down. It doesn't show how the actual businesses are doing. Buffett prefers to focus on operating earnings. That's the actual cash the businesses Berkshire owns generated from their operations. And last year, that was about $37 billion. It's a much clearer picture of the underlying health of the company.
So, okay, what's the takeaway for us? It's not just about Berkshire, right? Feels like a bigger lesson about how do you judge anything complex? A company, a project, maybe even a personal goal. How do you look past the surface noise, the headlines, to see what's really happening underneath?
That's a great point. It's a reminder to always look for the fundamental performance, the core drivers, not just the flashy numbers or the day-to-day volatility. It's about understanding the substance, not just the hype. But I guess there's a challenge there too, right? Because those market swings, those headlines, they do affect how people feel, how markets react, even if they aren't operating earnings. How does Buffett square that circle?
Well, that's maybe where the Birdie mindset comes back in.
Patience.
Right.
But yeah, that distinction is key. And it connects to how Berkshire itself looks at companies when they're thinking about buying them. Buffett lays out some clear criteria. What exactly are they looking for?
He's pretty consistent here. They want businesses with solid, long-lasting models. Those moats again. They need to be run by people they trust. Leadership is huge for Buffett. And, critically, the business needs to be able to reinvest its own profits effectively, to keep growing at good rates of return. It's a formula that's worked incredibly well. But, he also touches on a major challenge now.
Which is scale. Berkshire is just enormous. So finding new companies that meet those criteria and are big enough to actually make a difference to Berkshire's overall results, that's getting much, much harder. Those small hidden gems they found early on, those days are mostly gone for them now. Finding the next big thing requires massive deals.
It's like the curse of success, in a way. Finding elephants, not field mice, as they say. And speaking of challenges and risks, Buffett hammers home his #1 rule: never risk permanent loss of money. It sounds simple, but in volatile markets, how do they actually make that rule work in practice?
What's fascinating is how they do it. They keep absolutely massive amounts of cash and short-term U.S. Treasury bills on hand, always. This isn't just being cautious, it's strategic. It gives them firepower. When markets panic, when things crash, Berkshire has the cash ready to act fast, to buy big when others are forced to sell or are frozen. It's sort of counterintuitive. Holding cash might seem passive, but for them, it's a source of immense strength and opportunity. It guarantees they can play the long game.
That makes perfect sense. Ready to seize opportunities others can't. And when they do invest for the long haul, Buffett points to 4 specific bets he really likes, emphasizes the patience needed. Can you walk us through those?
Sure. First, the classics. Coca-Cola and American Express. They've held these for, over 20 years, never sold a share, and both keep raising their dividends. It's like the poster child for patient compounding. Then there's Occidental Petroleum. He sees it as a major U.S. energy producer, but also highlights its potential in things like carbon capture, so looking ahead. And finally, he mentions 5 Japanese trading companies. These are interesting, diversified, managed conservatively, known for being shareholder-friendly, gives them broad exposure.
So the common thread, the big lesson from these examples seems crystal clear. Find a great business you understand, make sure it meets your rules, and then just hold on. Patience really is rewarded.
Absolutely. It's fundamental to their whole philosophy. Long-term vision in action.
Okay, so beyond those big holdings, how did the rest of Berkshire's diverse collection of businesses actually do in 2023? What's the snapshot look like?
It was, well, a bit of a mixed picture, but with definite strengths. Insurance had a fantastic record year. That division is really the engine of Berkshire's growth. It generates all that float premium money they hold and invest before paying claims, which is a huge advantage. On the other hand, the BNSF railroads saw earnings dip. Railroads are vital, obviously, but incredibly capital intensive, always needing investment. And maybe the toughest spot was Berkshire Hathaway Energy. They took a big hit from wildfire costs and also changing regulations. It's a reminder, really, that even for a giant like Berkshire, external factors can have a real impact.
Yeah, that energy situation shows that even the best-run ships face unexpected storms.
Good point.
Now, toward the end, Buffett brings up something lighter, a bit humorous. He calls it the Omaha Effect. He points out how many key people at Berkshire, Munger, Ajit Jain, Greg Abel, even Sister Birdie have roots in Omaha, Nebraska. Is there something in the water there, do you think? Or is it more about the culture they built?
It's a nice touch, isn't it? He jokes about the water or the air. But maybe, yeah, the real point is about the culture, the stability, the shared values, the long-term relationships that seem to thrive there. It suggests that the environment they created in Omaha attracts and keeps a certain kind of grounded, disciplined person. Less about geography, maybe, more about philosophy. And he actually uses it to invite everyone to the 2024 annual meeting in Omaha. Come see for yourself, basically. Reinforces that community feel.
It's a nice personal touch. Okay, let's wrap things up with Buffett's final thoughts from the letter. He's pretty candid. Says Berkshire will likely grow a bit faster than the average American company, but people shouldn't expect, massive, earth-shattering leaps anymore. It's just too big. The focus remains squarely on safety, quality, and long-term value.
Exactly. And he circles right back, emphasizing that so much of this core wisdom, these guiding principles, they really stem from Charlie Munger. Munger's influence, he implies, will last as long as Berkshire itself. And Buffett leaves us with that essential advice, the distilled Berkshire way. Find wonderful businesses, hold them, stay patient, and never risk what you can't afford to lose. It sums it all up.
It really does. Such clear, practical wisdom. And maybe for you, listening, that's the final thought to mull over. How did these principles, that patience, looking past headlines for real value, protecting your downside, how might they apply beyond just investing? In any part of your life where you're trying to build something meaningful, something for the long term, what does it truly mean for you to embrace the Berkshire way in your own decisions? Something to think about. Thanks for joining us on this deep dive. We'll catch you on the next one.